It's been a rough few months for the price of the cryptocurrency, but are you still a lover of it? When a downturn in the market occurs, cryptocurrency isn't like a bad breakup, but we still don't know how long it will last. Join me today as I discuss exactly what's happening with cryptocurrency. Let's see if you are to freak out or not. But before you think of freaking out, make sure you subscribe and hit the notification bell. It was a rough weekend for cryptocurrency values, with the price of Bitcoin falling to its lowest level since December 2020. A month ago, the market experienced a similar decline. The free-falling trajectory of cryptos appears to have no end in sight. An amount greater than $500 billion has been wiped out from stock markets in the last 7 days. The total value of the crypto market fell to $1.2 trillion, a significant decline. Double-digit losses for all major cryptos, including Bitcoin and Ethereum, are continuing to flood the market. Details on Bitcoin's recent price decline and Terra's recent woes are included in this breakdown to address one important question: what's gonna happen next with crypto? Even though summer is here, the crypto winter is trying to make a strong comeback as the market continues to plummet this week. Despite the consensus of industry experts, traders are dumping their crypto assets at a record pace, even though this drop in the market shouldn't trigger widespread panic. According to Coinbase, hardly any cryptocurrencies are trading in the green today. What's going on with crypto? Exactly what's going on in the market, and what's the root cause? Even though volatility may be the quickest and easiest explanation, there are several other factors at play. After a weekend in which the crypto market lost more than $160 billion and the US crypto lender Celsius network halted all withdrawals, Bitcoin values fell below $20,000 per coin. At roughly $1,400 on Friday, Ethereum or ETH dropped below $1,000. The price of Cardano or ADA fell from 51p on Friday to 40p this morning, which is a similar outcome. The crypto market appears to be collapsing, or at the very least, going through a severe correction. As Bitcoin or BTC dipped below $33,000 this week for the first time in about 12 months, and as Ethereum or ETH and Cardano ADA also plunged. If you believe in the adage that you should buy the dip, you could be trying to get into the unpredictable cryptocurrency market, hoping for a transitory fall rather than a long-term decline. What's going on with crypto? Exactly what's going on in the market, and what's the root cause? Even though volatility may be the quickest and easiest explanation, there are several other factors at play. Let's take a look at the Terra's crash. Sorry for those who invested in it. We don't have time to give you guys a minute silence, so let's move on. Terra is currently trading at $0.68, a loss of 25%. Terra's algorithmic stablecoin or UST has been the talk of the crypto sphere this week. One of Terra's most recent investments was a $139 million stake in Bitcoin, the algorithmic stablecoin-powered blockchain e-commerce platform. It appears Terra's creator, Do Kwon, has changed his mind about his ambitions to build up a $10 billion Bitcoin reserve to assist enhance UST's value. An organization called Terraform Labs is responsible for UST, or the Luna cryptocurrency, and the Luna Foundation Guard, as well as the Luna Foundation. A total of 42,530 Bitcoins worth an estimated $1.3 billion were liquidated from the organization's treasury wallet, which Kwon also heads. Terraform Labs' Luna assets have also been liquidated, according to TechCrunch. Additionally, Terra's stablecoin is supposed to keep its value as close as possible to $1. When UST's Luna token falls below this threshold, it is destroyed. Luna's share price has fallen 95% to $1.10. Still talking about the Bitcoin's price drop. This week, the token's value is significantly lower than it was 6 weeks ago when it was trading at about $47,000. Terra's recent sell-off could be to blame for the current collapse of the coin. Traders may be under pressure to sell their Bitcoin assets if they believe significant investors are abandoning the cryptocurrency. Over the previous 6 months, Bitcoin's price has fallen by a half from its November 2021 high of $68,000. At the time of writing, the crypto coin is worth about $29,300, barely shy of the $30,000 milestone. As of July 2021, Bitcoin hasn't traded above $40,000 per share since, and the token has taken a significant knock. This week, the price of Bitcoin has continued to fall, yet some investors remain confident in the token's ability to recover. we're gonna tell you guys how the stock and cryptocurrency markets relate and how it is affecting the crypto market. You couldn't have missed the savagery of the stock market as this Bitcoin debacle unfolded. There is a sell-off in tech equities like Apple that has never been seen before, with all the main global indices falling with a YTD yield of negative 27.32%. The Nasdaq index has returned to 14.83% in the past month, so much so that it's even down 4% this week on the S&P 500 index. A possible link between the two would be interesting to investigate. Yes, they're also on the rise. It's no surprise that Bitcoin and other cryptocurrencies have seen a huge drop in value following a slew of unfavorable stories and catalysts, from Tesla CEO Elon Musk to a new round of regulations by the Chinese government. More than 3-month lows were hit on Wednesday, with the flagship cryptocurrency plummeting to nearly $30,000 at one point for more than 30% of losses, and continuing a week of crypto dumping. It was down over 40% in less than 24 hours for Ether, the primary cryptocurrency for the Ethereum blockchain network as well. In contrast to the tremendous climb that began in the second half of last year, the recent decline is a reversal of that. Despite a huge bull bounce fueled in part by hedge fund managers, banks, and other companies professing to embrace cryptocurrency, the price of Bitcoin is still up more than 200% since September. Cryptocurrency is now owned by a far larger number of people. A convergence of events, tax day, Elon Musk tweets, and so on started breaking down the buoyancy into market action, and now we have a liquidation event. Crypto has permeated our society. The Financial Conduct Authority, or FCA, the UK's financial regulator, has repeatedly issued warnings to crypto investors because of these kinds of losses. No profits are guaranteed, and investors should be prepared to lose their entire investment. Elon Musk made the announcement earlier this year that he was purchasing more than $1 billion of it for his automaker's balance sheet. Crypto trading teams were formed by major Wall Street banks and many payment service providers to better serve their clients. A cryptocurrency exchange called Coinbase went public in mid-April with a direct listing on the New York Stock Exchange. As a result of this announcement, Tesla has decided to stop accepting Bitcoin as a form of payment. On Wednesday, he used emojis on Twitter to claim that Tesla had diamond hands, implying that the business is not selling its current Bitcoin holdings. As a result of this, Coinbase stock, which had risen to over $400 per share shortly after its initial public offering on April 14th, fell to around $220 per share on Wednesday morning. As of writing this, the date of its direct listing is also the day of Bitcoin's highest all-time price. According to JP Morgan, institutional investors appear to be migrating away from Bitcoin and returning to gold based on futures contracts. The traditional metal as a store of value may be replaced by Bitcoin, according to some. In addition, regulators throughout the world have been paying more attention to Bitcoin and other digital assets as they've become more mainstream. In our opinion, another crypto winner and a decrease in trading activity could result from a government crackdown on cryptocurrencies. Many developing countries may perceive crypto as a danger to their fiat currencies and monetary system, which might lead to a more severe crackdown on it. According to a note from Bernstein's Harshita Rawat, published on Tuesday. On Tuesday, China reaffirmed its prohibitions against other digital currencies, forbidding financial firms from providing services for crypto trading. China is building its government-run cryptocurrency. As recently as this month, SEC Chairman Gary Gensler stated that he believes that regulators should remain technology neutral, but that more consumer protection is needed in the crypto markets. If you look at how Dogecoin became a sensation thanks to the support of Elon Musk, you can see how it could have tarnished the entire crypto market's reputation. It appears that the crypto bull market was fueled by speculative day trading in equities rather than greater institutional interest based on some of the smaller, less mature coins' movements. In recent weeks, there has been an increase in interest in less serious cryptocurrencies as well. SafeMoon, the cryptocurrency that Barstool Sports founder Dave Portnoy labeled as a shitcoin, was purchased for $40,000. And there you have it. Make sure you like this video, subscribe, and hit the notification bell. See you in the next video coming up.